Knowledge Alert, 7th to 11th of January 2019, JHS and Associates LLP, powering transformational insights. Ministry of Corporate Affairs. Reconstitution of Steering Committee of NFCSR. MCA reconstitutes Steering Committee of National Foundation for Corporate Social Responsibility, NFCSR, to oversee the functioning of NFCSR and to facilitate in policy research, advisory, monitoring, standard setting in the field of CSR. Reconstitution and renaming of Advisory Group of NFCSR. The Advisory Group of National Foundation for Corporate Social Responsibility, NFCSR, is renamed as Governing Council, NFCSR, and is reconstituted. Insurance Regulatory and Development Authority of India. IRDAI imposes penalty of 5 lakh rupees on United India. IRDAI imposed penalty of 5 lakh rupees on United India Insurance Company Limited, for violating provisions of All India Motor Tariff while settling motor claims. On-site inspection of the insurer revealed that the company settled lower amounts than the insured declared value, IDV, in motor vehicle claims and has been non-transparent regarding deductions made under the claims. Central Board of Indirect Taxes and Customs. Supply of religious products like books, CDs, DVDs by a charitable trust is a supply under GST, rules are Maharashtra. The appellant was a public charitable and religious trust and it published books, audio CDs, DVDs and other material for public so as to spread the knowledge of Jain religion. The appellant filed an application for advance ruling whether charitable activities carried and sale of spiritual products taxable under GST. AAR held that GST could be levied on such supply. The appellant filed an appeal against the order before the Appellate Authority of Advance Ruling, AAR. The AR held that certain services provided by charitable trust were exempt. However, selling of books, statutes, CDs, DVDs, etc. were commercial transactions done for consideration and hence, could be taxable supply under GST. Updated concept paper on GST. CBIC has issued Goods and Service Tax, GST, concept and status, as on 1st of January 2019. MVAT audit report due date extended. Maharashtra state government has issued notification, extending VAT audit report due date to 28th of February 2019. Service by corporate office to branch offices in other states will attract GST, rules are. The appellant was engaged in providing healthcare services and was registered under GST in Karnataka. It had corporate office in Karnataka and also had operations in 6 different states. Functions like accounting, administration, and maintenance of IT system were carried by the employees at the corporate office in Karnataka, benefit of which flows to the branch offices located in other states. The appellant filed an application for advance ruling whether activities performed by employees at the corporate office, in the course of employment for branch offices in other states shall be treated as supply. R had held that such services would be treated as supply. The company filed an appeal before R held that appellant is providing service to its other distinct unit, by way of carrying out such activities with the use of services of employees working in corporate office. Major decisions in 32nd GST Council meeting. The GST Council proposed various reliefs to MSMEs in its meeting. The Council took following decisions among others. Increase in threshold limit for exemption from registration under GST, for supplier of goods to ₹40 lakhs from ₹20 lakhs, states would have option to decide about one of the limits within a week. For service providers threshold limit of ₹20 lakhs and ₹10 lakhs in case of special category states will continue. Composition scheme turnover threshold increased to ₹1.5 crore. Special category states will decide within a week about composition limit in their states. Composition scheme taxpayers will pay tax quarterly, but file returns annually. Composition scheme will be available for supplier of services having annual turnover of ₹50 lakhs in preceding financial year. Scheme will also be available to supplier of goods and services. Tax rate would be 6%, 3% CGST plus 3% SGST. They will pay tax quarterly and file return annually. Small taxpayers will be provided free accounting and billing software by GSTN. Levy of cess at 1% for 2 years approved on intrastate supply of goods and services within state of Kerala. Group of ministers will be constituted to consider residential segment of real estate and to examine GST on lotteries. Central Board of Direct Taxes and Customs. CBDT notifies DTAA between India and Hong Kong. CBDT notified DTAA between India and Hong Kong for avoidance of double taxation, and prevention of fiscal evasion with respect to taxes on income. Circular on TDS from salaries under Section 192 during financial year 2018-19, CBDT has issued circular regarding instructions on the provisions, TDS rates applicable in respect of, salary payment under Section 192 of Income Tax Act, 1961 during the financial year 2018-19. It also includes explanations on many other related provisions under the Income Tax Act and income tax rules. Procedure, formats and standards of issue of PAN. CBDT has issued notification which lays down procedure, formats and standards for issue of PAN by Income Tax Department or authorized PAN service providers. CBDT notifies procedure for obtaining nil/lower TDS certificate. CBDT has issued notification containing procedure for filing an application online, in Form 13 for obtaining nil or lower TDS deduction certificate under Section 197, lower rate TCS certificate under Section 206C through traces. The notification also contains the procedure to be adopted by assessing officers for considering and granting certificate for nil, lower TDS deduction. Institute of Chartered Accountants of India, Exposure Draft of Accounting Standards. The Accounting Standards Board of ICAI has issued 2 exposure drafts as mentioned below. Exposure Draft of Accounting Standard 11, AS11, Construction Contracts. The AS11 has been drafted based on Indiana AS11. 2. Exposure Draft of Accounting Standard 18, AS18, Revenue. The AS18 has been drafted based on Indiana AS18. Recording of videos on GST conducted by Indirect Taxes Committee of ICAI. The Indirect Taxes Committee of ICAI has recorded videos on relevant aspects of GST including annual return and GST audit. The recording of these videos is available at committee YouTube channel. Topics like levy and collection of GST, input tax credit, credit note, debit note in GST, anti-profiteering, GST audit and returns, etc. are covered in these videos. ICAI enters arrangement to provide GST contents of website www.taxmanagementindia.com. The Indirect Taxes Committee of ICAI has entered into an arrangement with MSMS Knowledge Processing Private Limited to provide contents of its website relating to GST module to the members of ICAI at a subsidized price of Rs 2,500 plus taxes for updation and enhancement of knowledge of members in GST. E-Newsletter on GST. Indirect Taxes Committee of ICAI has issued 22nd edition of E-Newsletter on GST. This newsletter includes latest updates on GST and articles on important issues under GST. Education material on Indiana AS 110. CAI has brought out education material on Indiana AS 110, consolidated financial statements, containing brief summary of the standard and frequently asked questions, FAQs, and illustrations explaining principles pronounced in the standard. Reserve Bank of India. RBI limits liability of customers in unauthorized electronic payment. RBI has limited liability of customers in cases of unauthorized transactions, in prepaid payment instruments, PPIs, issued by authorized non-banks. Earlier the Consumer Protection Framework was restricted to frauds in banks. The users of PPIs will now not be liable for unauthorized transactions due to fraud, negligence, deficiency on part of the PPI issuer. In case of third-party breach, the liability of the customer will be zero if the customer reports the breach within 3 working days. Directions under Section 35A imposed on the Youth Development Cooperative Bank Limited. RBI puts directions under Section 35A of Banking Regulation Act, 1949 on the Youth Development Cooperative Bank Limited, Kolhapur, Maharashtra from close of business on 5 January 2019. The directions inter alia mandate that the bank shall not grant or renew any loans or advances, make any investment, incur liability including borrow of funds, sell or transfer or dispose of any properties without prior approval in writing from RBI. Further, depositors will be allowed to withdraw a sum of up to 5,000 rupees of the balance held in saving bank or current account or any other deposit account. RBI issues guidelines for tokenization of card transactions. RBI has allowed authorized card payment networks to offer card tokenization services to any token requester, Tokenization involves a process in which a unique token masks sensitive card details. This token is then used in lieu of actual card details, to perform card transactions in contactless mode at point of sales, POS, terminals, quick response, QR, code payments, etc. All RBI in its guidelines on tokenization of card transactions said that tokenization and detokenization shall be performed only by authorized card network and recovery of original primary account number should be feasible for the authorized card network only. At present this facility shall be offered through mobile phones, tablets only. NBFC's registration cancelled. RBI cancels certificate of registration of 45 non-banking financial companies. RBI amends gold monetization scheme adding new list of entities. RBI has amended the gold monetization scheme, 2015 whereby it added charitable institutions, the central government, state government or any other entity owned by central government, or state government to the list of entities which can make deposits under the scheme. NBFC's registration cancelled. RBI cancels certificate of registration of 32 non-banking financial companies. RBI defers implementation of last tranche of capital conservation buffer. RBI has deferred the implementation of last tranche of 0.625% of capital conservation buffer, CCB, till 31st of March 2020. The CCB is the capital buffer that banks have to accumulate in normal times, to be used for losses incurred during periods of stress. SBM Bank, Mauritius, Limited excluded from the second schedule of the RBI Act, 1934. RBI has issued a notification advising that SBM Bank, Mauritius, Limited, has been excluded from the second schedule to the Reserve Bank of India Act, 1934. RBI constitutes Digital Payments Committee. RBI has announced formation of high-level committee on deepening of digital payments. The committee will review the existing status of digitization of payments in the country, will identify the current gaps and suggest ways to bridge them. It will suggest measures to strengthen the safety and security of digital payments and thus help in boosting confidence of customers. Cooperative bank penalized. RBI has imposed penalty of Rs5 lakhs on Harihareshwar Sahakari Bank Limited, Way, Satara, Maharashtra for violation of RBI instructions, guidelines relating to director-related loans. Securities and Exchange Board of India. Stockbrokers and depositories using AI tools to make security disclosures. SEBI has directed stockbrokers, depository participants using applications based on artificial intelligence, AI, and machine learning, ML, to make quarterly disclosures on their compliance with cybersecurity framework. They shall also report about the implementation of AI or ML system, safeguards in place to prevent abnormal behavior of the application and whether the system disseminates investment strategies or advice and name of the application. Acceptance of probate of will or will for transmission of securities held in dematerialized mode. To harmonize the procedure for transmission of securities in dematerialized mode, with that of transmission of securities in physical mode, SEBI has issued a circular directing that transmission of securities held in dematerialized form shall be dealt in line with SEBI listing obligations and disclosure requirements, regulations. SEBI issues new framework governing changes in issue size. SEBI has issued issue of capital and disclosure requirements amendment regulations. The new norms require filing of fresh offer documents in those cases where there has been a change in issue size. Under the new norms, filing of a fresh offer document is required if a company changes the estimated issue size by more than 20% in its initial public offering, IPO, or by more than 50% in its offer for sale, OFS. SEBI forms Research Advisory Committee. SEBI has constituted a committee which will formulate policy for undertaking research, for development and regulation of capital markets. The committee would include prominent financial economists and market practitioners as its members. The committee will also develop and maintain database relevant for capital market regulation research, and will explore research collaborations with other sector regulators. SEBI amends prohibition of fraudulent and unfair trade practices, relating to securities market regulations. SEBI has brought in some amendments in SEBI, prohibition of fraudulent and unfair trade practices relating to securities market regulations on the basis of the recommendations of the Committee on Fair Market Conduct. The amendment changes the definition of dealing in securities to expand its scope and also include any acts that are knowingly designed to influence trading decisions and act of providing assistance in dealing in securities by manipulative or unfair actions. It also clarifies the scope of actions that are considered as manipulative and fraudulent as per Regulation 4 of PFUTP regulations. Further, it is explained that market participants shall include any person or entity registered under Section 12 of SEBI Act, 1992 and its employees and agents. SEBI rationalizes committees at market infrastructure institutions. SEBI has asked market infrastructure institutions, MEIs, such as stock exchanges, clearing corporations and depositories to constitute 7 mandatory committees. As the scope of work of some of committees at MEIs was interrelated and overlapping, SEBI decided to rationalize constitution of existing regulatory committees at MEIs. As per the new norms, every MEI shall set up committees under 2 broad categories. A. Functional committees comprising of Member Selection Committee, Investor Grievance Redressal Committee and Nomination and Remuneration Committee. B. Oversight committees comprising of Standing Committee on Technology, Advisory Committee, Regulatory Oversight Committee, Risk Management Committee. The composition, quorum and functions of the committees would be as specified by the Board from time to time. Cybersecurity and resilience framework to be made applicable for MFs/AMCs. SEBI has put in place stricter cybersecurity framework for mutual funds, MFs, and asset management companies, AMCs, to guard against breach of data leak. With rapid technological developments in securities market, there is a need for a robust cybersecurity and cyber resilience framework to guard against breach of privacy and protect integrity of data. As per the circular issued by SEBI, AMCs and MFs need to formulate a comprehensive cybersecurity and cyber resilience policy document adhering to the required framework. The policy document should be approved by the Board of AMC and trustees. New portfolio concentration norms for ETFs and index funds. SEBI issues a circular with respect to portfolio concentration norms for exchange-traded funds, ETFs, and index funds, asking fund houses to have a wider basket of stocks and at the same time capping the weightage of top stocks of the index. The norms, inter alia, set limit on weightage of single stock and sectoral, thematic index, fix rules for minimum number of stocks in an index. SEBI amends prohibition of insider trading regulations. SEBI issues notification amending prohibition of insider trading regulations. The amendment rationalizes the provisions of the regulations on the basis of the recommendations of the Committee on Fair Market Conduct. The key changes in the regulations are: specify policy for determining legitimate purpose for sharing of unpublished price-sensitive information, UPSI, as a part of codes of fair disclosure and conduct. Any person who receives UPSI pursuant to legitimate purpose shall be considered as an insider and notice to be given to such insider to maintain confidentiality. Structured digital database to be maintained containing names of persons with whom UPSI is shared. Additional defenses introduced when trading in possession of UPSI. At the same time, an explanation has been inserted which says that, when a person in possession of UPSI has traded in securities, it would be presumed to have been motivated by such information. The amendment stipulates separate code of conduct for listed companies and intermediaries and specifies the categories of persons who would be designated persons. The entities will have to formulate a code of conduct to regulate, monitor and report trading by designated persons to ensure compliance with the requirements in the regulations. It is also provided by way of an explanation inserted that professional firms such as auditors, accountancy firms, law firms, consultants, banks, etc. assisting or advising listed companies shall be collectively referred to as fiduciaries for the purpose of these regulations. The provision is intended to mandate that persons other than listed companies and intermediaries which handle UPSI have to formulate a code of conduct governing trading in securities by their designated persons. Professional firms such as auditors, accountancy firms, etc. shall be included in such other persons. The CEO, MD or such other person of a listed company, intermediary or fiduciary shall put in place adequate and effective system of internal controls to ensure compliance with various requirements in these regulations to prevent insider trading. The Audit Committee of listed company or intermediary or fiduciary shall review compliance with these regulations at least once in a financial year and verify that internal controls are adequate and operating effectively. The listed entity will have a whistleblower policy and make employees aware of such policy to enable employees to report instances of leak of UPSI. For any comments, Query or recommendations you can mail us on connect@jhsassociates.in or call us on 08097095060.